Okay, hello everyone, and welcome. Today is Tuesday, May 19th. Welcome to this intraday strategy session on SB Trade Desk. Good to be with you guys this morning. We are just getting the release of building permits and housing starts for the United States, both topping estimates. Housing starts with a really nice print here of 20.2% month over month for April. We were only looking for a print of 9.6. The print of 2 previously from last month did get upgraded or upwardly revised to 4.9. So a strong beat there. Building permits also topping estimates with a print of 10.1% month on month. There we were looking for a print of just 2.1. So you're seeing the dollar with a nice breakout here. A little earlier than expected, but certainly we are seeing that dollar strength top that 11,737 level that we were talking about yesterday. So we will jump right into the trades. As always, if you have any questions or trade setups, guys, that you want to look at, please feel free to throw them on the message board. I'll be more than happy to take a look at them for you. So, looking at the relative performance in the top right-hand corner of your screen there, you can see the dollar with a nice rally today, stronger against most of its major counterparts, save the Kiwi, which has a slight gain of about 0.1 of a percentage point here. But the euro and the pound really seeing some weakness today. Versus the dollar at least. A lot of rhetoric coming out of Europe. Obviously, the ECB came out and said that they're going to push the gas on quantitative easing as they head into the summer month lull, as they call it. Seasonality slowdown there in equities, charging some more action from the ECB. The BOE, obviously inflation figures came out. You saw the BOE come out and said that inflation is likely to remain slow for the next couple of months. That limits scope for any type of normalization from their end. And obviously the pound crosses with a reversal. Specifically, the pound crosses that we talked about yesterday, guys, if you attended the Daily FX webinar. Guys, as always, Daily FX webinars are public on Monday. We did talk about the pound yen. And certainly that saw a nice reversal in overnight trade as well. That was holding right at resistance for days. So we'll go over that setup as well. All right. So for the dollar index, here's what we're looking at. Before we jump into the crosses, I did put a piece on this on Daily FX yesterday. 11,737, huge region. Okay, it was the low that we made in April. The lows for February, swing low for January, 236 off the low from July. You had the median line, or a basic trend line resistance, right off the highs coming into that region, and the former opening range low for the month. Okay, so it was all sort of lined up right into this region here. You got the trigger break. We talked about this yesterday to the upside. Here's resistance right into the upper median line parallel. Okay, that's just shy of the 2009 high, which comes in at 11,854. So you might have some more upside to go here for the greenback. I do want to note that resistance trigger, in momentum is also on tap here. So we'll be watching this into the close today. Don't necessarily want to call this an operative trigger with resistance right there, but if we make it through and momentum does close above that trend line, you could have a broader reversal here for the greenback. Not the base case scenario, but those are the implications if we top side break above 11,880. Also note that right in that region is the objective monthly opening range high. Okay, so you have your invalidation level. As it stands right now, the rally looks to extend a little bit higher, and we'll be looking for short triggers. We'll be looking for resistance right up into that 11,850 starting off for the greenback. Also note, right at 11,857, you have a 100-day moving average, which has also been a very nice pivot in price, specifically on a close basis. And that coincides there as well. So really big confluence region for the greenback. And again, we'd expect to see this topside rally start to fizzle out as you get towards that 11,850 mark. Eileen, good morning to you as well. Always good to see you in the room. GS. Khan saying, it's been tough lately to trade euro dollar. Price has over and undershot. Should we avoid trading it? Khan, there's nothing wrong with standing back from a pair that's been a little bit unexpected. But I'd have to say this. Most of what we're seeing here as far as the pound specifically and the euro are event risk driven, meaning that there was something that triggered the event. Specifically for the euro, it's going to be what we heard from the ECB. Specifically for the pound, it's going to be those inflation remarks that we heard from Carney. So, Khan, stuff like that, yeah, I mean, you have to be aware of the economic docket and when it's coming out. For the euro, we might as well just jump in since you're asking about it, Khan. It's the third scalp down from the intraday page if you're following along. And here's what we're looking at yesterday with the euro dollar. Okay, so that 1229 mark was a confluence feature of both the descending channel here and also the broader median line off the lows. Here's what it looks like on the daily. Mark says euro pairs was nice to wake up with huge gains, though. If you're on the short side, sure, yeah. I mean, here's the thing with the euro, guys. The short side bias was, or the long side bias. Let me take a step back. The short side bias was confirmed with a break of the opening range yesterday, right? So as far as the direction, that shouldn't have been surprised. The magnitude of which, I didn't get to catch the drop either. A lot of this happened in overnight trade, but if it would have, I would have been out, right at that 112 level, which was the next level down from the scalp. So before we jump into the 30-minute, I do want to start off with the daily real quick, just to show you where we are. We talked about this yesterday in the webinar, the risk for a reversal for the euro below that 114.70 region, which was the 1618 extension off the high. You had the close highs for February. You had median line resistance. And certainly while we did want to see one last spike in there to get into that short, the opening range for the week broke to the downside. Here's a momentum trigger on the daily chart that's breaking to the downside. Now, it doesn't mean you want to start getting short euro here, because we are coming into some near-term support, namely this median line here, which is a longer dated median line, guys. Let me just zoom this out for you real quick. Okay, here's the median line that we're talking about. And you can see, I have it in gray because it's already been compromised on both ends, but you can see the pivots that we've gotten back in 2014, late 2015, or late 2014, excuse me, to open up the year. Okay, acted as support, and the break was really the onslaught of the decline that we saw into those 2010 trend line support. So that level is coming into view on a closed basis. It hasn't been compromised really this month. That's coming into view right now. We're right around where we are, around 11. Let's call it 11:20, 11:30 here. So on the daily chart, you sort of have a clear picture of where we are and where we turned, right? We're back below that median line structure. So if we break lower, 110.95, 110.90, 109.90, excuse me, would be 50% of the rally. And again, this is going to be your broader bullish invalidation for the rally off of those March lows. It's right there into 109.90. All right, so that's the daily chart. So you had a nice reversal yesterday, took out the weekly opening range low. We're back below this trend line or slope line that we've been following off the highs from December, so we're not really going to stress that anymore right now. Here's what the euro looks like on the intraday. Let me show you the same scale that we were looking at on the scalp chart. All right, so here's where we were yesterday, right? And obviously, we were talking about the possibility for that upside trigger to give out. That upside trigger actually did give out. You got in the rally right into the resistance level that we were talking about, 113.20, 113.23, which was the lows from Friday. It was the pivot high for Asia Pac for the opening range. And obviously, we broke right back down. Okay, comments from Europe really charging a decline. You got those that sell-off that broke back below 112.78, 112.58 was where we were talking about as the invalidation. Again, ahead of schedule here as far as when that broke, but this would have been the target at 112. So now at 111.34, 111.20, like we said on the daily chart, remember you have that slope line. It's also the lows from last week, and near-term support comes in for the euro right into this region here. Okay, I'm going to zoom this out in a second and show you that slope line as well. Just have to snap that for you guys. So here's the median line that's on the daily chart that we broke below. And this is why we were looking for timing-wise. We were looking for this to happen a little bit earlier or a little bit later in U.S. trade today. Obviously, you can't pick when those comments come out or when it charges the market, but there's the break. All right. So at this point, reserved on the short side for the euro. If you haven't gotten involved already, if you're kicking yourself because you missed it, don't worry. The market will always provide another opportunity. But certainly a really nice break here below that 113 level. And again, the move that we talked about yesterday, guys, I leave the intraday charts, the previous ones, just so you can see for your scale on the scale side. So if you look, this is where we were on Monday. That was the invalidation level, it was 113.80, right? That slope line, a basic trend line support off last week's low, and it also would have compromised the swing highs from the previous week to start off May trade, which were right at 113.80. Okay, So once that break gave out, that's what this is here. The short side focus is in play. And keep in mind, we opened the week below 60 in momentum, and there was a 40 break right on the onslaught of right on the open rather of the week. So you're already looking lower, looking for resistance at 50, looking for resistance at 60, looking for trigger breaks here on the break of the U.S. opening range yesterday that took us below that trend line. It confirmed the downside bias. Okay, remember we went over this yesterday in the webinar as well. The euro has been the best representative of the opening range strategy in and of itself over the last 3 weeks. So we want to make sure that we're using that to our benefit when we recognize that a trade, has really been moving well with that type of play. So, Khan, does that offer some clarity on the euro? Let me know if you have any specific questions on it. At this point, you could see a rebound. 112 is going to be resistance. Again, the bearish invalidation level now gets brought down to this region. Okay, so as long as you stay below the median line, you don't really want to start getting on the long side of the euro. In fact, you're looking to sell bounces as long as you stay below 112.30, 112.25. I know at swing trades, we're looking for a support hold here as well. If you got caught on that one, again, a lot of these things are going to be event driven or driven by a specific release. The run will be much deeper than you expect. And you're absolutely right, Khan. When the price overshoots and it undershoots our targets, you start to scale back from scalping that pair, right? But this hasn't necessarily not abided by any of our targets. It's really just been the magnitude and the severeness of the move. I think, relatively speaking, the bias for the euro has actually been pretty clear over the last couple of weeks. Stefan, great to see you in the room, says, when you talk about an RSI break, like 60, is that an exact number, or is it 62 close and then drops? Is that a 60 hold? Yeah, Stefan, nothing's a vacuum in trading, right? Yeah, if you see a 61 print and then it reverses, 62 print, then reverses, yeah, I mean, I'll consider that a hold. Now, Stefan, it also has to do with duration. If it stays above 60 for, a couple of hours or a day or two, then that's something different. But if you get a spike push, like something like this, I wouldn't consider that a 50 break. Do you know what I mean? It says close enough is a hold. Great. Yeah, just keep it in mind, guys. We use these strategies as tells. I don't really want any of you emphasizing all of your trades on any oscillator because it's not a good idea. Okay? They're all backwards looking. We're using this as a tell for what we're seeing in price. The focus will always be what price is doing. Okay? So, Stefan, hope that helps, man. Eileen says, how far back on the 30 do you generally start your fib? Low for the month, last month, etc. So, Eileen, it's not in time, it's price, right? So, again, shifting the focus away from these misconceptions. It has nothing to do with time, Eileen. It's the structure of the advance or the decline. So, for example, you're looking for the legs of the ascent or the legs of the decline or the range high-low. So, for example, the last major stretch from a high-low is right here, right? I think we would agree this is all part of one singular move. That's a retracement. Off the lows that we made from the initial rally. So here's the initial rally. What's the initial major pullback that you got was right into here. So this is another one that we used this was 2 weeks ago, for the pullback to find support at 786 is exact low. On the entire ascent, right, I'll have another fit on the break of the lows to have that in view. It doesn't matter if this low was a month ago. It doesn't matter if this low was, last week. It's all about the price, right? I don't want to stress time per se when I'm looking at a measure of price action. Not with fibs. With fibs, you're looking to play the range, you're looking to play the pullback, you're looking to see where the extension gives you price targets. You're not necessarily looking at the time value. Eileen, does that make sense? On the upside here, for the top side targets, how am I going to find the top side target? It's very simple. What was the last major high that we put in? Scroll back. On that fib here that you see, the last major high was February. This was the last high that we made before we came right into that yearly low. So that right there warrants a Fibonacci retracement. You can see that the 764 offered that high that we made in April. Getting a little messy here in the 88.6. Doesn't really jive as well with the European counterparts. 88.6 retracements, I always tell you guys, are really good with the calm currencies, the Aussie, Kiwi, CAD. A lot of times I've seen 88.6s catch major moves, but it gives you reference, right? So Eileen, I hope that offers some clarity on that. Roseman Jamal, great to see you, sir. Says, hello, Michael. Thank you for yesterday. Excellent level. I hope you did not cover the dollar index and gold. We'll go over both, Roseman. We did cover the dollar index briefly, but we'll go over the gold trade for sure. Emil says, hi, Michael. Can you share with us the ATR settings on your intraday chart? Sure can. So if you double click on the ATR setting, the one thing that you're going to always want to do is go to data source and then make sure that's selected on day, okay, and put set as default. And what that's going to do is that every time you bring up that ATR, it's going to give you a quarter of the daily ATR. Whereas if you bring this up and don't change the data source, it's actually going to give you a quarter of the 30-minute ATR, which is not what we're looking for. We want a multiple of what it's doing on a daily basis, okay? So Emil, hope that helps. As far as the parameters are concerned, again, we're either going to have a 40 or a 60, or excuse me, a 14 or a 20 period ATR. And looks like my charts are freezing. Give me one sec, guys. Okay. Yeah, you're more than welcome, Emil. Okay, so that's the euro dollar coming into support 113.35. Honestly, we'll be looking to see how this opens up the session. Here's what it looks like on a 5-minute chart, so we can kind of get a feel for what price action is doing on the near term. Okay, you can see some divergence here into the lows, 30 holding, lower low in price, higher low in momentum. Could be overshooting the reaction there from some of the comments that we got from the ECB, but not necessarily willing to fight that trend to the downside just yet. By the way, the near term, like I said, near term bearish invalidation level, the reversal play for the euro would be a break back above that 122. Basically that confluence barrier there. All right, and one thing I also want to do is start cleaning up some of these levels. We're not going to need that 618 anymore. Oops. And in fact, that 786 is probably useless at this point as well. We can get rid of that retracement altogether. All right, so those are the levels we'll be working with on the euro. See if we can find some support here, heading into the 111 handle, basically, if we break lower from here. Roseman says, I'm long the index. I close the long or wait for 11.836. Okay, Roseman, let me take a back step for you guys in the room. Just bear with me one moment. Here's what the dollar index looks like, Roseman. Again, we went over this earlier. The resistance range I'm looking for, I can't tell you exactly what to do, but the resistance range I'm looking for starts into 11,850, basically. I like your target 11,836, a little bit more conservative. If anything, Roseman, I'd be looking to bring my stops up, but there's really not much ahead of this. The only other level I would be mindful of, and I did this yesterday, but I think I removed it, obviously, is a basic 618 of the monthly range is something I would be mindful of. So this retracement here, and it looks like you're popping through that now. It basically came in at 11,800, if I'm not mistaken, 11,798. So you're making it even through that right now. 786 comes in right at 11,842. We bring that into a 11,836. Yeah, I like that level. I'd be bringing the stops up, like I said, to 11,737 if you're in ahead of that. For me, that's sort of the invalidation play for the long side. But certainly, I wrote about this piece yesterday, guys, in Daily FX. By the way, all the pieces that you'll see on Daily FX from me and Jamie will also correspond to our pages here on the intraday and swing page. So if you click on yesterday's piece, here's what the index looked like. And that was the invalidation level for the short. Okay, so certainly as you go through 11,737, you're looking for that target right up here into that region you're looking for. So Roseman, I like that target. I can't say I got any problems with that. All right, so once again, that's the dollar index. A quick jump into what's happening in gold. Obviously, um, clean is the play for gold, as it has been. You know, obviously yesterday it looked like it was breaking 1225. This is the importance of stressing the close, guys, and not what intraday's price action is doing. Obviously, we don't follow gold on an intraday level, but as far as trying to ascertain near-term buys, is try to ascertain near-term price movements. The close is critical, and if you bring this into the line chart yesterday, you don't see cleaner moves than that in commodities, guys. Just doesn't happen very often. Everything. Look at the median line, the reactions that we got there, the breakout of the confluence region. Now support right at the median line again, right? Want to pay attention when price is giving us these types of clear movements. So gold at near-term support. Remember, the invalidation level that's on the scalp page is going to be 1210. 1210 is Friday's low, okay, right down here. And also that same median line that we were just talking about on a closed basis, which offered such nice reversals. So this is really the bullish invalidation level for gold, is 1210. Near term, you're coming into support as we speak. Okay. Jamal saying gold long, wait for a long, or long from 11,716. Okay, where are you getting 11,716? I assume you're looking at this median line down here. I'm not even looking there just yet, Jamal. And again, keep in mind a couple of things. For me to get a target down there, well, first of all, let me take a step back. First of all, the first target with a break below 1210, in my personal opinion, would be 1200, which was the objective monthly opening range. Okay, so for the month of May, you set the range. Here's the range high and the breakout level that we got on the 13th. That's going to be the initial target if we break below 1210. I'm sorry, you're talking about the dollar index. You're talking about gold. Should you wait to the long? I think so. I think you need some clarity. And the one thing that I want to look with gold is I don't necessarily want to play the correlation play, Jamal, with the dollar. But if the dollar has a little bit more to go to the upside, I wouldn't be surprised if gold presses just a tad deeper. Remember, gold is priced in dollars, but the correlation hasn't been quite that strong per se, where we can just use it as a one-to-one tit for tat like that. Give me one sec, guys. And I just want to show you the corollary play here between gold and the dollar. So if you take a quick correlation chart of what gold is doing and what the dollar is doing, obviously gold here is in gold, or whatever color that is, and the US dollar is in white. You can see that the inverse correlation is in play at a 0.35% coefficient. It's very, very weak. It's not something I want to necessarily stress per se. But if the dollar index has a little bit more to go on the recovery here, you can expect to see possibly gold give us a little bit more of a pullback here. So keep that in mind. Not the strongest necessary play that we want to use. I'm sorry, this is actually looking at the on the wrong one. Well, any event, I don't want to waste time trying to adjust that right now. You get the point. So watch for a possible dip deeper in gold, but you are coming in some near-term support here. Break below 1210 really opens up 1200, and then median line support. Obviously, in time that'll be variable, somewhere in the range of 1190, 1180. Break back above. Just for the record here, Roseman, if you want to play, if we're playing the rebound, Okay, what would put me back on the constructive side would be a more assertive move back above 1218. 1218 is a huge region because you have the 200-day moving average sitting there. You have the 1618 extension. This is off the ascent from the lows. Okay, and then again those median lines just below. So 1218, 1217 pop puts us back on the constructive approach. Might have a little bit more to go here before it starts to find some more meaningful support. He says, now there is no inverse relationship between gold and the dollar. Again, the inverse relationship is always going to be there, Roseman, but there's different times when you have that correlation much stronger, and there are different times when that correlation is weaker. And right now, that correlation is not such where, you know, it's significant enough for me to necessarily want to make a play out of it. Hold on one second. Okay. All right, moving right along. Sorry about that. Okay. The Aussie dollar. Let's go over the Kiwi first. Who had a question here on the Kiwi? Raj saying, can you look at the Kiwi dollar? I'm long this pair. Okay, here's what the Kiwi's doing on the intraday. First, let's start off with the daily. So we were sitting right on that median line, and even in near-term price action, this proposed structure off the high was so clean, right? You got some inflation data, 2-year expectations on inflation for New Zealand stronger than expected. You saw that really fuel an upside rally in the Kiwi and overnight trade. Here's what that data print looked like. So 2-year expectations came in at 1.85%. That's a topside beat for the second quarter. We were looking for 1.8. And again, you saw that rally. It really, all it did is offer an opportunity to get back on the short side. You saw a false break at the top side of this play here. This is where you might have gotten faked out on it, Raj, if you're holding longs. I'm not sure where you're holding longs from, but remember, as far as the Kiwi's concerned, you want to be very careful of trying to jump on board a reaction play like that when you get some sort of release. Nothing's really changed from the technical side of things. Even if, you know, this was the bearish invalidation level, topside, I hear you on that. But once it reversed and came right back down, your stops should be super tight, especially if you're holding longs or playing longs near the top side of the range. So nothing's really changed on this. Not necessarily a trigger I want to stress so much because, again, don't like to play the divergence when it's a trigger. Typically like to take it off the lows. But we'll leave it on there for now from here. Okay, so here's what we were looking at yesterday, right? We were literally coming right into the lows here, right before the release. I literally published this like minutes before the release. You saw that topside break take you right through the median line and then right into the upper median line parallel. This break here in the wee morning hours of Europe is sort of the false break here that kind of might have faked you out. But on a trade like that, when you're playing the breakout, you have to have tight stops. You have to have tight stops. There was not really much on that breakout to warrant a play, in my opinion. And specifically, once momentum fails right ahead of 16, comes right back down again. This is an example. Who was asking that earlier? Stefan, that was you, right? Yeah. So here you got a quick 60 break. It didn't even last an hour before this thing collapsed. And that's in the same session. Once you take out the session lows, that's an invalidation altogether. Okay. Let me show you what this looked like on the 5-minute chart. Maybe I'll offer some more clarity. All right, so here's that median line structure right here, right? Okay, and there's the breakout. First of all, the breakout, as soon as it rallied into the highs and you saw momentum hold 70, that's something to be concerned about, right? Because right off the bat, you're putting in divergence. That's not alone enough for me to trigger a trade, but there was actually a trigger in momentum that came just a little bit afterwards. And it's important to note, guys, that we don't only use these triggers to put us in the move. We also want to use these triggers to take us out of the move. Meaning, if I took a long here, I saw that trigger. Let's say I was looking really deep into price action and I played the divergent signal here, which again is not something I like to do, but let's just say I got a little carried away. Let's say I played this long trigger here and it broke the highs and I'm like, wow, okay, Mike talks about the strategy all the time. Short a long here against the lows. Let's go for the 25 pip scalp, right? Well, it rallied, then it failed. On the highs, you have divergence. Now on the way down, if this trigger break gives out a support, that warrants me jumping out of the position. False break scenario, whatever you want to call it. In case, let's say you missed that trigger and now you're already in the trade and you're in a loss, once it takes out the session low for Europe, then you're out. Then there's no reason to be stubborn and kind of hold the position. All the factors that warranted the long side have been omitted, right? Have been negated. So in that type of play, there's nothing wrong with just jumping out with 10, 15, whatever the loss is. You don't have to wait for the full 25 limit. Again, on whole, guys, we're always going to want to stick to our convictions. So we're on whole, we're going to want to put our stop, put our limit, and let the market play out. But when you're playing something that's event risk driven, when you're playing something that obviously you get signals against the bias that you're in, there's nothing wrong with pulling that trade out. Raj, does that make sense? Listen, I'll take 5 pip, 10 pip hits all day long. No problem. I'd rather do that than sort of sit out the entire range if there's a clear signal telling me that I should be looking the other way. And remember, on whole, Kiwi, opened up the week on the short side. We're playing the reversal here. We have been since last week. So the inclination and the comfort for us to get on the short side is fine. Looking at the Kiwi for the daily chart, like I said, that median line here has us weary of the short side because on a close basis, you know what I mean, we haven't really cleared it. So I do think you can get a bounce still. I'm still looking to sell that bounce. There's really nothing that would invalidate my short bias until we get, unless we get back above sort of that 74.50 region. Any questions on Kiwi Dollar? Okay, you're long from 7,400. Not so bad, Raj. I really wouldn't. So you're about 25 pips under right now. See if this bounce holds. See if this momentum bounce holds. You're just opening up the U.S. Range right now. I wouldn't use this dollar index necessarily as a strong corollary because remember, this does not contain the Kiwi. And this index is just the Euro, Aussie, Sterling, and Yen. But let's see if that momentum holds. Essentially, I would want to tell you that if we break the lows for the week, the major support confluence at this point is going to be right down here. And that's basically like 73.27. Last week's stretch lows. Remember, that was the objective measured 100% move from the highs. And is also 100% extension off the lows. Off the highs as well. So the measured move up gives you 73.27. That was almost the exact low in that initial stretch last week. 100 off the high comes in at 73.22. So that's the level of support if we break the lows, just for your information. On the trade that you're in, you would really need to clear this range to get back on the constructive side. Guys, the bearish invalidation level doesn't change just because we got a false break. 74.20 is still going to remain the bearish invalidation level for Kiwi. Especially now that we're still holding within the confines of that really clean formation. Raj, does that help? It's a simple false break, man. It happens. Don't get too hard on yourself. I would just caution you, if you're still in that trade and it's based on the intraday strategy we use on SB, you really should be out at 25 pips. Just keep that in mind. And also that drill that I just did with you on the 5-minute, if the market gives you a signal against the bias that you're in, and especially on a breakout like this, there's nothing wrong with cutting out of that trade early, Stefan. So a quick tidbit, or Raj, I hope that helps. He says, thanks. Yeah, they're more than welcome. Stefan says, I'm long at 73.80. Is a break below 30-minute a trigger to get out? Oh, a break below 30, a trigger to get out with a stop at 73.50. I would say so. I'm kind of expecting it because we've already seen 60 hold as momentum, and we're coming from sub 30 already. So yeah, I would say that would be a sort of a tell. Would I use that to get out of a trade as a stop, Stefan? Not personally, because remember, guys, price dictates everything. Momentum is there to help. Price dictates everything. So for me, if 30 breaks in momentum and we're still holding the lows, I don't know necessarily if I want to jump out of that trade. But if we get through the lows and 30's breaking momentum, both of those together, to me, tell me something. Stefan saying, need to remember price in parentheses in caps plus the oscillator, right? Price action is everything, guys. Nothing supersedes basic support and resistance. Not Fibonacci, not moving averages, not any type of oscillator under the sun. Okay, basic support and resistance is all you need. And if we're not a testament to that, I don't know where you can find it, because Jamie's is exclusively on support resistance, right? With the median line formation and all this. So just keep that in mind. Right on, says Stefan. I love the enthusiasm, man. Great. Moving right along. Bill, great to see you in the room, sir. Says dollar CAD potential for a short. I think so. On a scalp basis, I wouldn't necessarily want to call the end of the rally, but the only thing I'm looking at here, actually, Bill, what I was looking at this morning, we're pushing higher, is the opening range high for the month. So the actual high for the month comes in at 122.03. We're right there right now. The monthly opening range here is super clean. Last month's opening range was textbook. Here was the break on the 15th. April high, April low, fail at the highs, break the lows, bearish against the highs, close at the lows for the month. So, that's like a textbook play. So here again, if we're setting up the monthly opening range, here's the low, test the high, fail at the lows, you break the high, bullish against the lows, you'd look for a recovery higher, actually. So, Bill, near term on the daily chart or on the daily scale, yeah, if you find 22 holding here into the open, you might get a kickback off it. But essentially, if we push through these highs and close, you'd look for a rally into that median line first, and then on a break there, right into the lows that you made for the February close. That takes you like 123.80. But right now, resistance, yeah, I would be looking at the monthly high. Right there. See what the intraday chart looks like for dollar CAD. Okay, so that median line formation off the high here has us breaking, or trying to break through that median line right now. You can see it hasn't been the cleanest. We've already seen a lot of pulls through that, so I'm not going to necessarily stress at this point. But now that we've made sort of an asserted low near term, we've cleared some highs, a basic retracement off the high is going to serve us best. So again, Eileen, stressing price, right? Not time. That high could have been this month. This high could have been 3 months from now, right? It's this move that I'm measuring. Eileen says, is your mic turned off? Guys, are we having any issues with sound? Okay, thanks for that, Emil, Bill. Bill, does that mean there's no sound? No, Bill? No sound issue, says Jay. It's fine, says Emil. Okay, thanks for that, guys. Eileen, let me know if you're having any issues. I just typed you a message there if you can hear me. But a quick retracement off the highs. Roseman, thanks for that. Sorry, guys, I'm a little anal at getting my levels right on. Come on. Okay. Okay. Cool. 122.68 would be a 38.2. 50 would take you right into the lows for that swing April low, right around 123.75. So we're looking at similar levels from the daily chart. If we close here above this median line on the daily chart, if we close above the highs for the week, or the month rather, 122 is what I'd be looking at. 122.03 is the actual low, or is the actual high rather for the month. Here's the May open. So this is sort of what I'd be looking at for the close. If we close above that region right there, I don't think I'd want to fade this per se, Bill, just on account of the levels that we're breaking at this point. If anything, you'd want to look for a pullback and try to get back on the long side. Does that make sense? Mark says, dollar CAD, 122.69 is a good level in my humble opinion. He says, haha, yeah, that one. 122.69? Yeah, that's the 38.2 that you're looking at. Sure. I don't know if I'd want to start fading it there. Maybe on a pullback scenario off resistance, Mark, for a scalp. But let's see a couple of different things here. Bear with me one sec, guys. Let's just do some on the fly and see if there's anything that comes up. Oops. Okay, that highlights the region we just kind of took a look at. So that's one possible scenario here to invalidate the long side, to see a break below that. Okay, and on the near term, just bear with me one more second. I just want to see what this looks like. Yeah, everything that you do kind of confluences that same region. In fact, I'd probably work better with this one just on account of the pivot that we got right there on the median line. So let's work with that for now. Again, Mark, 122.69 could turn out to be a level. There's no major highs or lows in there aside from the 38.2. So I'd be cautious. You'd want a pretty, what's the word? A pretty compelling short trigger up there to try to fade it. More interesting for me would be something up here or a break back below basically the Asia low that we made at 122.20 to play the recovery into this zone. Other than that, I'm not sure there's any major plays here for me on dollar CAD just now. I mean, Jamie took a nice ride on the upside here on this one. Really nice hold at the lows, nice turn in momentum. You were getting some divergence as you made that new low. You got a couple of topside triggers. Looks pretty good. Looks pretty good. Again, 122.69 turns out to be the median line on the daily chart. So that might actually be a decent level. After all, hold on one sec. Let me bring it here. Something like that. Yeah, Mark, actually, it might not be too off, man. Might not be too off. Here's a median line off the lows that you made for 2013, specifically in September, and the early high that you made back in February there. Got a little messy on the top side, but you can see some nice rebounds off of the MLP and the broader median line back in focus here. Not bad. All right, so hope that helps on that, Bill, as far as dollar CAD is concerned. He says, yes, thanks. All right, we did go over the Kiwi Aussie real quick. The RBA yesterday coming out with some interesting comments, and essentially the major comment the headlines ran with was the fact that the lack of guidance that they're giving as far as interest rates doesn't rule out further easing. And certainly if you look at the Credit Suisse overnight swaps, you start seeing them factoring in a 77% chance for another 25 basis point cut at the next policy meeting. We're not going to look too much into that. We're not going to stress all that jazz. Price action has been pretty clear as far as what we've been seeing, and the break and hold below the 80 handle yesterday continued to reassert the short side. And remember, this was the near-term bullish invalidation level. We hit this support on Friday. We bounced right off it. Yesterday, we talked about this in the webinar. Break below the 80 handle, or the 80 handle, excuse me. Basically, you're looking for a rally, a pullback, excuse me, into this median line off the lows. And that has a little bit further down to go. Here's what Aussie looks like on the intraday. Very similar structure to what we were looking at in the Kiwi. Again, although you got the break above the upper median line parallel, this is the range of resistance that we were holding as our near-term bearish invalidation. We came right into it, it held, and then we slammed right back below again. So there wasn't really any compelling plays here that was easy, guys, aside from what just happened on the print for the U.S. Housing markets. But let me show you what the 5-minute chart looks like here for the Oz. Okay, and basically, what time is that? The 1:30. That was the same rally that we saw there. Okay, even in momentum, coming from sub 30, you ran into 60. You got a false break above 60 here. This is a 5-minute chart though, so we're literally talking about a 10-20 minute span where you saw momentum try to break 60. There's no plays here because your stop would need to be below the session low, which would basically be a 50 pip stop. So that shouldn't have been a fake out for anyone as much as it was in the Kiwi. The Kiwi looked a lot more compelling like it was breaking out before it reversed. This one wasn't the strongest signal. And in fact, on that false break, you then got a 3-point trigger break to the downside. That's a much more compelling trade against the Asia Pac highs to the downside, looking for about 28 pips per scalp. All right. Again, formation, we'll leave that in play for now. Although we drifted above, you can see at the lows here getting caught by the median line once again. Next support structure is right here. Okay, nice pivot from last week, right around that 79.16 level. And then the major key support is just beyond last week's low, the low that we made for the month, and that comes in at 78.62 into 78.72. That's basically the same region you're looking at right here. So the Aussie, again, might have further down to go. Bullish invalidation, or bearish, excuse me, invalidation now should now be brought up to the highs that you made for Europe. So essentially, sits with the same exact range here, guys. Right into the 80 handle. So basically, as long as you stay below this region here on the daily chart, bearish bias is in play for Aussie. Not our favorite play. I'm not gonna lie to you. I'm not. Although we were crazy about this one last week, kind of the lackluster chop fest that we saw here, and specifically yesterday on the break below the 79.80 level, fizzled just ahead of our target. Remember, 79.46 is what I put on the report. The actual low was like 79.55, so missed it by about 9 pips to the downside. But either way, as long as you stay below the 80 handle, this region right here, risk for further downside remains. Remember the broader structure here we're looking for on the Aussie, guys. Right? So if we are breaking that median line support range, by the way, this is just the same slope, sliding parallel to the lows that we made for the 7th here, gave us that range that we were looking at to open up the week. Emil says, is it possible to take a look at sterling Kiwi? Sure can. And I also have written down here sterling yen, which is a very, very compelling case on that trade. We talked about that yesterday, about the resistance level looking lower. That saw a massive decline today as well. So we'll take a look at that. But sure, we can take a look at sterling Ki. Here's what it looks like on the daily for sterling versus Kiwi. Play in the levels. This thing is pretty clean. The purple line you see there is actually a 100% extension from the ascent, rather, off the lows for 2013. Okay, I'm not really going to stress that, although that caught the highs this week pretty nicely. Near-term support, 209 into 209.50, a larger range. But guys, we're talking about a pair that has almost 300 pips on a daily ATR. So when the ATR is that big, you want a lot more ranges for your support and resistance, just because you're never going to be able to pinpoint the exact print. But I'm respecting this range here near term. That's all I wanted to highlight. Into 121, 40. I'm sorry. What is that? 112.40, and then 209.06, exact 236 that we just kind of bounced off of again. Could fizzle out. I like the broader topside play in general. I haven't looked at this in a while, so if you want to bear with me just one moment, we'll see if there's any new structures in play. No. Let's clean this up a little bit. That was right the way it was. Not my favorite setup. Again, remember earlier last week, guys, we were talking about pairs that were clean, had clean technical structures and whatnot. This is one of those pairs for me. You know, the breakout that we were talking about earlier in the month, that was something that was interesting. But at this point, you know, I really don't see it. I don't see a clear-cut play for a scalp type of objective. Let's see what the near-term chart looks like. Here's what the open for the week. And let's just see if there's anything compelling enough here. Yeah, it looks like I was playing that steep one here on the near-term charts. And we'll just take a quick retracement. So some of my favorite setups, guys, are when a retracement off the high overlaps extension off the high overlaps a retracement from the low. Those tend to be really strong pivots, inflection ranges, areas of low tolerance where the market will really find a little bit more of a reactive play. Just want to check, see where the major levels are. Yeah, they're pretty close enough. So these are kind of the major ranges I'd be looking on the short side if we do break lower in Kiwi, in Sterling Key. The concern here more so for me is being aggressively long the Kiwi, Emil. That's my problem with the trade. I think the pound could still probably get a little bit more pullback, but I don't necessarily want to play it versus the key. Okay, so if you're looking for a scalp setup, by the way, anyone who's new to the room, remember any chart that you see on any of the webinars on SB, you can always click on that camera on the top of your screen, and it'll take a free shot of any of the charts that you see. So even if it's not posted on the intraday page or on the swing page, anything you see on the webinars is fair game for the levels that if you guys need it. So Emil, just for your consideration there. But you know, if you're looking for scalp targets on this, and we'll take a look at sterling yen in a moment. I know we're way over on, we're coming way up on time here, guys. It's about 5 minutes left for the open of U.S. trade. Those are sort of the levels I'd be looking for on sterling key for a near-term setup.
Really, the risk is if you break lower below 208.75, you'd be looking for a run into like this region here. There's really not much. Maybe get a pause at last week's swing low there. Actually, that'd be a nice scalp target for a soft support right around there, and so forth. But in my opinion, this is the weekly opening range at this point. I wouldn't want to use, because we gapped higher. We just filled that gap at the open. This is sort of the range I'd be wanting to watch. And that range on the daily chart is highlighted with the high lows that we made, literally. So, Emil, I hope that offers some clarity on near-term prospects here for Sterling Kiwi. Not my favorite setup. It is a very healthy range. 72 pips is a quarter. So, there's room to play. It's just the directional bias as you hold this resistance. I'd be weary while above 208.75 for any aggressive shorts. That's sort of my line in the sand where I'd want to get more aggressive on the short side. Make sense? Says thanks a lot. Hey, more than welcome, Emil. It's a tricky pair. It's a tricky pair. It's got a bigger range than I like to typically scalp. But hey, man, if you have the conviction behind it, the levels are mapped out for you here. Really quick, guys. I just want to go over sterling yen. This is a trade that we talked about yesterday as well. Here's a quick look. Just wanted to show you this chart. If you've been following me on Daily FX, this was again, the trade setup for 2015 was long sterling yen and sterling CAD. This is the weekly chart, okay? I just wanted to bring you into perspective for where we are on the broader trade. This is a pretty big range, okay? 188.27 constitutes a 1618 extension from the ascent off the 2009 low, the 2009 high, and the 2011 low. All the extremes we made on the turn before the breakout that we got back in 2012. Gives us the 1618 right here. 50% off the high, highlighted 184. That's the region that caught the highs on this initial rally. And look where we're testing now. Same region. So on the broader prospect, you are coming in some major resistance for sterling yen, even on the weekly prospect. And this is on the back of a 5-week advance. You know what happened last time we saw a 5-week advance? Yeah, you do. It was right here. We pulled right off. So the possibility for a pullback here definitely is there. It's right in front of us. And now that price has reached that extreme once again, you want to be mindful. You have a very clear bearish invalidation level. As long as 188.30 holds, as long as that 188.27 level holds, you could see a little bit more of a pullback, just like we did the last time we made a 5-week stretch. Okay, the last time we saw a stretch beyond that was here. This was actually 6 weeks, and that was the high for the year. And again, I'm not calling a major high in sterling yen. Again, it's my trade of the year. I do think this is constructive. And even you look at this from a monetary policy standpoint, as I said yesterday, I think this makes sense. But near term, it's an uptrend at resistance. It's funny because people they fall in love with the bias, and now every pullback they'll be starting to buy. No. This thing could correct right into all the way down to 84 again. That wouldn't be outside the realm of possibilities, guys. That'd be like a 300 pip move, 200 pip move. So we want to make sure that we're just keeping our expectations based on what the broader prospect is saying. So that's the weekly chart. Daily chart for sterling yen looks like this. Okay. Yesterday we talked about 88.27, 88 handle for a while. It's the 786 extension off the low. We're not stressing that, but it's also an 88.6 off the high from December. The highs on the stretch that we made for the initial push came right into the median line resistance. That held. We were looking for a possible break below that median line yesterday. We didn't close there, but today's move asserted it. So near-term support target was 86.66, which overlapped specifically dead on with the R1, the major key support, and the bullish invalidation level, 185.36. We just missed that on the pullback here. Median line off the low is there. And the current operative lower median line parallel coincides all with the 236. Okay, now just be a basic 236 retracement. So wouldn't be surprised if you see sterling yen pop into another low here, but don't want to get aggressively on the short side unless that breaks. This actually would be a nice area for some possible long exposure. Okay, on the intraday,
And one other thing I want to point out, guys, that trigger, okay, if we close there today, that really gives us validation on a near-term pullback into median line support. Looking at this on the 30-minute, drilling down even deeper, okay, of an objective break of the weekly opening range. Here's the weekly open. You push into a high. You test the lows. You fail at the highs. Break of the lows. Bearish against the highs. Looking for a late week low. Now we can come all the way back and test the opening range low, and that wouldn't invalidate anything. It's the break back above that would invalidate it. So from a scalp bias, this rally could get back into 87.28, but if that breaks, that condition that put us bearish no longer exists, which means the bearish outlook or the near-term bearish scalp bias is invalidated. So look and see this rally. If we get some short triggers, if we get any compelling triggers on the short side from up there, if we get back into the opening range low for the week, that would be a really nice scalp again to try to press the short side of the trade. I don't want to necessarily use that trigger per se. There's not much by way of triggers on the 30-minute chart that we can work with. You're going to want to stay tight with the... Oh, that's a possible trigger you can use to the upside. Former trigger support. That coincided with a break of the weekly opening range. A lot of times these triggers can invert. So whereas the break gave you the support break, the resistance break gives you the reversal. Again, we're not necessarily looking to play the long side, but I'm just saying, if you're looking for some short triggers, this might hold as resistance, would be a nice hold as you get into the US session. Here's what the 5-minute chart looks like on sterling yen. Yeah, it's too steep. No triggers here yet as well. Keep your eye out as price develops. I'm sure you'll get a low here. We can connect and make some triggers to see if we can get a reversal play. But right now, wouldn't be surprised to see this thing come right back into the 87 handle near term. So that is sterling yen. We'll add this one if we do get some clarity today and it does hold 87 as resistance. We'll throw this up on the intraday page. But one other thing I wanted to point on this before I go, guys, is look at the median line structure for this play. Yesterday in the webinar, I showed you this one, okay, which is a long-standing median line that we were looking at for like literally 4 weeks. This thing held. It was ridiculous. Then we got a downside break. That was the median line that finally gave us the breakout for the continuation. If we use that range for this new structure, it's pretty darn clean. Pretty darn clean. And this break suggests, again, we could see a dip into 85.66. And that would complete a basic 38.2 retracement and would be a nice tag of the lower median line parallel to the current operative slope. Okay, so that's like right around here. So we'll see if that holds into the opening range low. If you get a short trigger there, downside break, you're looking for 185.66, 185.65, lower median line parallel for support. All right, obviously we all know what the bearish invalidation level is, right? A major key resistance into 88.20. And that is sterling yen. All right, over on time as always. If there are any other quick questions, feel free to throw them out on the message board, guys. The focus as we get into the mid part of the week here, obviously the dollar index, we're looking to see if this thing caps out near that 11,836 level, near trend line resistance or median line resistance here. Also for gold, we're looking to see if that low holds as near-term support. Again, the broader trade remains constructive while above that median line. As far as the euro dollar is concerned, we went over that trade. That's been approaching near-term support as well. So don't get jumping on the bandwagon, guys, with everyone who's super short. We did tag into the 1135 level we were looking at earlier ahead of the webinar, and you're seeing that offer some support, divergence into the lows. Don't want to stress that trigger anymore. Pretty tight, but we'll look to see something like that if it offers any plays with price on a type of recovery move. And one other quick median line I just want to check out. See if this does anything. Yeah, also might be in play here, and it further highlights that swing high we made in European trade. Okay, so based on time, levels of resistance we'll want to check out. With the operative one, guys, the main one being, that median line off the low. This is kind of the main one that we want to get back above to invalidate this short. Other than that, you're looking for short triggers well below that region. All right. All right. So, guys, we will go ahead and wrap it up here. Emil says, thanks a lot. Mark says, message board. Not sure what you mean by that, Mark. If you have any suggestions, again, feel free to throw us an email. Oh, I meant the squawk, if anything. And the message board, when you guys type questions, I get a message board that comes up here with all your questions. So that's what I meant, Mark. No worries. Always a pleasure to be with you guys. I will see you bright and early tomorrow morning, again at 8:30 for another hour-long intraday strategy session. Try to keep you updated on the SB squawk. And again, we're pretty much wrapped on data for today as far as the United States is concerned. Remember, as you head into the latter part of the week, that CPI data is really going to take forefront on Friday. Obviously, tomorrow we're going to get the minutes released from the Fed. That'll be another dollar mover that we'll be very mindful of. And guys, if the dollar pulls back from here, it'll be interesting to see what the Fed minutes do, whether it charges one last spike into the highs. Typically, Yellen likes to give us a little bit of a prop here on the greenback. So we'll go over the implications of that tomorrow ahead of the webinar right before the release, which will be at 2 p.m. Against the minutes, it's not anything new. We already know what the statement said. There wasn't much change to language. So, we'll approach that with caution as we head into the afternoon session tomorrow. Best of luck trading. See you tomorrow morning. Cheers.